Here's past hot asset classes. And this is why we will never chase performance. Even if it's U.S. stocks that are the hottest asset class for the year, we will not chase it. In the coming slides, I'm going to go over some of the years where the S&P 500 did very well, but I'm also going to show you where the S&P 500 did terrible. And those years could pop up at any time, so that's why we're not going to chase performance. Here's past hot asset classes right here. You had Japan, you had technology, you had gold that was hot, you had oil and gas that was hot for a period of time. When oil went to $120, $130, $140 a barrel, and they said it was going to go to $200 a barrel, and $300 a barrel, and $500 a barrel, and gasoline was going to be $5 a gallon. Well, what happened in 2014? Oil crashed. Unexpected by all the experts. Had no idea. That's why we don't forecast and predict the future. Gasoline, I think I paid, I'm in California, so we pay higher gas now, but we still paid about $2.49. I'm saving all kinds of money on my gasoline now, which is great. If things don't change, I think that's going to have a ripple effect around the world, and we could have some positive economic effects in the future. But there are other variables that could mitigate that. So we don't make forecasts or predictions and don't put all our eggs in, because I think oil and gas is going to have a positive effect with this decline. But anyways, oil and gas passed. Real estate was hot, and it was pretty good again last year. Stocks get hot every once in a while, but then they cool off. Commodities get hot. China was hot. Then we had the BRICS, Brazil, India, China, and Russia. Everybody wanted to invest in the BRICS, and they were hot. And Brazil and Russia and China did okay last year, but Brazil and Russia just crashed last year because they're an oil-dependent economy. So those are past hot asset classes, and that's why we don't chase them, because they became cold. Now they could get hot again, who knows? Unseasoned investors extrapolate recent past performance into the future. They think if it made 15% this year, it's going to continue to make 15%. Or if it lost 20%, it's going to continue to lose 20%. Here's one thing I can tell you. It will change. Here's my prediction. The only prediction that I'm going to make for you that you can trust. Things will change for reasons unknown to us at the present time. That is a certainty. Every year there's all kinds of unknowns that happen that change markets, and faster than you can even imagine. Unseasoned investors that want to chase the latest, hottest asset class are short-term focus. What they do is they see the U.S. market's up, and all of a sudden they forget about risk. So this is the S&P 500 from February 29th, 2008 to February 28th, 2009, over a one-year period, was down 43%. And I don't know, that could happen the next year. There's all kinds of crazy things that can happen that can drive the markets down. Hopefully it won't happen for another 10, 15, 20, 25 years goes by before this happens again. But the point is it could happen, so we don't want to chase the S&P 500 just because it was hot last year.